Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Sean M., Mark R., Luke A., and Ryan S. On the program today, we've got a new guest and company joining us. Mr. Todd Hilditch is with us on the podcast. Todd is the Chief Executive Officer of RLYG Gold, a Nevada, United States-focused gold explorer advancing the Pipeline West Clipper project located within the Cortez Gold District on the Battle Mountain-Eureka gold trend. The company currently has a joint venture arrangement with Kinross Gold, whereby Kinross is earning into the project up to 75% by spending $20 million on exploration and advancement of the project. RLYG Gold is listed on the Toronto Venture Exchange under the symbol RLYG, as well as on the US OTC markets under the symbol RLYGF. Mr. Hilditch, welcome to SmithWeekly Discussions.
Andrew, thank you so much for having me this morning.
Yeah, Todd, it's good to have you on the program for the first time and looking forward to talking about RLYG Gold. And of course, you are new to the podcast. And as such, I'm guessing some of our audience probably doesn't know who you are. Why don't we start off here by having you give us your background and experience in the junior natural resource sector?
Yeah, sure. Well, I've been kind of in the sector for about 20, maybe 25 years, if I wanted to date myself. Certainly on more of the early stage exploration. I believe that all the way along the upside is in the early stage. So I've been involved in everything from uranium to lithium, mostly gold, though. I would say three-quarters of my time has been focused on gold, and for the most part in the Western United States. Good, safe jurisdiction. So a little bit of background. I went to Rensselaer Polytech Institute in Troy, New York. Moved back to Vancouver and got involved in the junior markets. So it's been a great ride. Obviously it gets a little tumultuous at times with the different commodities, but love this industry. My grandfather was a miner. He did the hard stuff though, Andrew. He had to go underground thousands of feet, and I sit behind a desk for the most part and work that angle. So a little bit about me.
Todd, thank you for that. Good stuff. And interesting times here in the markets with everything that's happening out there. We appreciate you sharing some of your background and successes there. You've been in a couple different commodities, and as you know, depending on what company focus it is, things can be quite difficult. Commodity prices can run, and nothing can happen in these juniors. But then also, company-specific discovery success drives it all the way, and nobody cares about the commodity. So it's an interesting market for sure. How do you look at the gold market today, Todd? I mean, there's a lot going on out there in terms of market events. Investor sentiment for exploration companies, depending on jurisdiction and stage, is varying all over the place. Some of the majors are getting a little bit of love for the cash flows, but what do you think out there as far as gold market generally, and then exploration companies that are focused in pro-mining states within the U.S.?
Yeah, that's a tough question today. But I think, I'm of the vintage, I guess you could say, that, in the old days, when the gold prices were up, the majors would move along very quickly. And then, 3 to 6 months later, the mid tiers, and then it would eventually get down to the juniors. We're still seeing, in my opinion, a disconnection in terms of the junior golds and the exploration side of the business, where we haven't received all of the love that you used to. So to answer your question is kind of a conundrum, in my opinion. Again, only because world strife, things that would affect prices of juniors, and gold really. When there's political events, when there's geopolitical, when there's different scenarios that would normally affect the price of gold. I don't understand them today. I mean, it sounds like a very simplistic question. So I've always focused on supply and demand, which is kind of the basic root of why a price should go up and maybe should go down. And in our industry, with all of the production worldwide, in particular, sort of in the United States and or maybe North America in general, we have a diminishing set of ounces through production, and in my opinion, the juniors are the best way for discovery. And so, from our standpoint, personally, anyways, with Riley, I mean, we focus on that angle and hope for a potential upside. And I stick in safe jurisdictions. I mean, you don't get much safer than Western United States in general, Canada, Australia. There used to be an old adage that you want to have a project where you can take your family on vacation. Now, I don't apply that strictly to what we do, but it is nice to be able to jump on a plane, go down, and be in a state, as an example, Nevada, where it's the sixth largest producer, if it were a country in the world. So, lots of gold endowment, lots of mineral endowment, I should say, in general. But this, North American and United States part of the world, it's good, safe, good place for us to be. And gold prices are going to be gold prices. I can't control that, nor am I smart enough to envision what that will look like in a year.
If we can get some success on the ground, company specific success, and you guys are in the highest risk end of that as far as exploration success. Either you have success or you don't generally, and so that's always the big driver and the big focus, despite what the commodity price is doing. And then of course, within the U.S., you've got state jurisdictions which are horrible, and you've got state jurisdictions which are fantastic. And of course, you guys being in Nevada, that's one of the highest level fantastic ones within the United States. And I think you and I can agree, Todd, as well, that we probably wouldn't take our family on vacation in certain U.S. cities either. But we'll leave that one for another time. But Nevada's a great state, among a small handful of a few others in that area. Just great places to live, great places to work, and are pro mining and understand the wealth generation that can come out of their mineral endowments. Very good stuff there. Well, you started to talk a little bit about Riley, so why don't we get into that? Give us just a brief overview of the company and also a background and why you started this up.
Yeah, so I'm probably a serial entrepreneur when it comes to the mineral side. We've been fortunate enough in a couple gold companies to, be able to get to a stage where we've been acquired. We've had some success on that, well, also along with lithium and uranium. But from the gold standpoint, we've always looked at the sector as, you don't have X-ray vision here. You don't know where deposits are. So Nevada being a well-endowed state, let's go to Nevada. Let's find projects that are either well located, sort of within different neighbors, as an example, or different trends. So we've tried to focus on that. And some would say, well, the low-hanging fruit is gone. It's not gone. You just have to look harder. And in our case, having a joint venture partner like Kinross, which I'll speak to a little bit more in depth in a second, for a junior to have that opportunity is just amazing. So when we put Riley together, we looked at a few things. One was structure. We've got 42 million shares issued and outstanding, which is pretty light. Management owns about 20-25% in that range. So very well structured. We don't have an institutional base, very retail oriented, high net worth, and folks that have been with us for several iterations of acquisitions and M&A. So they have some comfort that we'll, run the company accordingly and do the best we can. And, I think we have a motto around our office, which is, it sounds weird, but, don't lie, cheat, steal. If you're talking to an investor, a shareholder, everybody in our industry knows how difficult it is to find that little yellow stuff thousands of feet below the surface. So from a company standpoint, it's important that we, do what we say we're going to do. We'll raise the dough. We'll use that dough accordingly in terms of trying to make a discovery. And our management team is really critical. And I can go through that if you'd like. Our management team, I mean, we have some really neat people that have had great successes. I mean, I feel honored for some of the folks that we have with us. So I guess to kind of sum the first part up is good people, good structure, folks that have done it before and had some success. Don't get me wrong, we've had lots of failures when you're looking for gold, but at the same time, you try to mitigate those risks. So jurisdiction risk, people risk, money risk, and project risk, we've tried to mitigate to the best that we can.
Todd, thank you for that. And let's go through some of that here in a moment. But the Pipeline West Clipper project, talk briefly about how you guys came across that, why that project was obtained. And with that, I'll tie that in with the recent news that Kinross is kicking off an exploration program at the project, which is south from the town of Battle Mountain, Nevada. Talk about those plans there for this first program as well as the target selection.
Yeah, so it's interesting. I mean, I've been involved in Nevada for 20, 25 years. So relationships. We were introduced to the project through somebody that we hold dear on our legal side of the sector, and just brought it up one day. And ironically, we were able to negotiate a deal, a fair deal. We did some initial work on it, which we'll follow up on in terms of what Kinross is doing. But it just seemed like the right place. Right time is a tough word to use in our market, but it's in a state that's well endowed, but it's in a trend that's extremely well endowed. And our project lies basically on the very west boundary, sharing a boundary with Barrick and Newmont's NGM, so Nevada Gold Mines. Nevada Gold Mines, along this sort of Battle Mountain trend, has up to 50 million ounces, 50 million ounces of past production and current reserves. I mean, your listeners will have heard of Pipeline and Cortez Hills, 4 Mile Gold Rush. So, when we could tack on to the western boundary, not just because of closeology, but because there were some really strong geological reasons. And we had an opportunity to pick up almost 25 square kilometers adjoining them on the west side, literally up to 600 meters away from one of their open pits called Gold Acres. It just made sense. And then, interestingly enough, on the other side of us, NGM also had joint ventured with a company called Ridgeline Minerals on their Swift project. So we have, one of the world's largest gold producers in NGM, literally on most sides of us, and an opportunity geologically to really have some upside through discovery, and that's what attracted Kinross. So right place, right area. The stories around the discoveries at 4 Mile and Cortez, et cetera, are amazing. And I can talk to some of our advisory that have had real life contact and input into those discoveries, one being Mr. Paul Doback, who is the former North American chief geologist for Barrick. So when we can, tune into his experience geologically and what's going on and has been going on out in this district, it's just, it was perfect for us.
To attract Kinross, I guess we can move into that now here as well. So the location's fantastic. A lot of untested ground here. Talk a little bit about how the relationship with Kinross came about, and with that, I suppose we'll get into the earn-in as well. But talk a little bit about how Kinross came along to be part of this, and then what you guys would expect on this first program as far as target selection and how you guys are testing.
Yeah, and actually, you touched on something that I missed, which is, the area that we have, or the project area that we have on the very direct west side of Gold Acres, had not been drilled in a specific area where some of our early stage soil samples and geophysics and mapping and actually structurally that had not been drilled before in all of these years. Yet it sat right beside NGM. So that's what caught us and caught our attention. And then eventually, to go to your question, is that's how Kinross got involved. So we did some preliminary work, and then going back numerous years at PDAC, actually, where many deals get done, I had the fortunate opportunity to sit down over breakfast and explain to the folks that run the exploration side in Nevada with Kinross, and basically went through a presentation and showed them what we had, and it was really neat because there's certainly a bias that who worked on this project before that? What about the project before, who were the owners before this? And there's this iteration of timeline that sometimes there's a bias of, oh shoot, someone's already looked at that. It's not there. Kinross has been just so amazing. They, first of all, were open-minded about the additional science that we had done and brought attention to sort of a target area. So they were very open-minded about that. They were open-minded about being next door to, the big NGM. They work for their shareholders, and I'm assuming their decision-making was, well, hang on a minute. There's this string of gold deposits, string of pearls, however you want to mention it. And, there could be a great opportunity here. So that's what first got their attention. By the time we worked out a deal, it's been great, and they're very open too. I mean, I'm not a geologist, but I can pick up the phone and I can talk to them, and I'm not told wait till our next quarterly meeting. So it's been really, really cool that way. Accolades to Kinross for being so open in terms of JVs. Our agreement with them is staged. So as you mentioned at the onset, in order for them to earn 75% of the project, they need to spend $20 million US. So call it 27 million Canadian. And it's staged in the sense that the first 10 million for 60% over the first 4 years. Now they're well into it. We drilled one hole last year, came out near the end of the year. It was more of a stratigraphy hole down at the south end of the property because you're looking for a lower plate target versus an upper plate target. So it's staged where minimum spending requirements over the few years to get to $10 million. And then there's a second earn-in right for the next two after that for an additional $10 million. The assumption being if you're spending the second $10 million to get you to 20 million US, you're onto something is the premise. And they invested on a diluted basis up to 9.9%, 5% out the gate. So they believed from an investment standpoint that there was an opportunity here as well. The work that we had done leading up to them getting involved, this is what's really been intriguing. Because yes, the property we have has had a few groups through here, but there's also been long periods of no work and holding onto a property, for whatever reasons, maybe because it's next to NGM and the massive endowment of gold there. But the work that we did, and really most importantly, was the soil grid, Kinross, and we are currently drilling that very specific high grade gold soil anomaly, the biggest and highest grade soil anomaly on the property, which has never been tested. It's kind of dumbfounding in some ways, but anyways, the point being is they're currently on to the second drill hole of this particular season, pre-collaring the hole, and then they'll follow up with core down into the lower plate, which is the typical target and host rock to the deposits and the discoveries out in this area. But it's a long trend. You'll be able to see, or your listeners will, in our news releases. We've got a map that shows sort of the target area, and we're excited about it. I'm not sure when the core drilling is going to begin, but it should be in the next few weeks. RC is well underway, and then we'll be waiting for the truth serum. And really, what you're doing out here is you're testing a target, but you're also testing and understanding where the rocks change from upper plate to lower plate, and then you're vectoring in on where drill hole number 3 would be drill hole number 4. It typically doesn't happen on the first hole or two, as you know, but Paul Doback has such a history out here that I had a really neat Zoom call with him, and we walked through structures and maps and target areas yesterday. And I get off every call with him thinking, man, how lucky we are to have this gentleman along and working as our representative with Kinross.
Good setup, and you guys have some opportunity here. Of course, as you said, not always the first couple of holes hit something, but more of those are informational holes, so you can dial in and have some more accuracy as to what you're doing. But with Paul there, selecting some of these targets and guiding that process, that's an added piece of value for sure. With respect to the overall length of the program, it sounds like a few holes will go in here and that you guys will start having results here probably in the next month or so. Some of that might start becoming then assays, but I suspect some news on this program over the next few months. Is that correct as far as you're thinking?
Yeah, I would argue that you're probably in the back end of those few months. I know last year when we did the core hole, it was a long, deep to 3,600 feet core from surface. So that took a long time. With the RC that we're doing now, that's mostly upper plate. It was not the typical host. So we may see some numbers from that, probably here into the next 30 to 60 days. I'm guessing they haven't told me, and nor can they control the lab, but it's really the core. So I would say, yeah, end of the summer, into the early part of the fall, I think we would have results out for the market, and really more importantly for their decision making as to which way to vector next.
Besides Paul, and feel free to add Paul in here too, just any other key staff at the company that you want to mention and what they bring to the table.
Yeah, so from a management standpoint, I'll just touch quickly on a couple. But like William Lamb is our chairman, and William was with me with Terrico Gold. We sold that to Sailfish Royalty. He is in his second iteration CEO of Lucara Diamonds, which is a Lundin company. The guy finds diamonds the size of tennis balls. It's just mind boggling. But he's been an amazing guide for us. He took the original Lucara up to $1 billion in market cap. So he's very busy with Lucara, but he's a great guide. Paul certainly, as well as there's a couple others more so on the director side. We've got a permitting expert. We've got a legal representative, Cindy Lavelle's been with me forever. But Tom Patton's an interesting one. And Tom Patton was with Quaterra, but prior to that, he discovered or was the lead on the discovery of the Penasquito silver gold mine project in Mexico, which is currently the largest producing gold and silver mine in Mexico. I've known Tom for a long time. He's a brilliant geological mind. He sold his company to Glamis, which then got bought by Goldcorp. So, really, really a special guy. So I'm lucky. John Schaff is with Core. He's one of our directors, was with Core, I should say. So we've got some, been there, done that people, very strategically in terms of technical, but also we round out well, I think, as a company. And fortunately, we've had a little success on management as well and other people.
Todd, and on capital structure, just talk a little bit more about that. You talked about the shares outstanding. Talk a little bit more about that as far as where you guys stand as far as cash on hand. How far are you seeing that carrying the company? Obviously, given that Kinross is operator on the project, you guys have a pretty low burn, is my suspicion here. But also talk a little bit more about the major shareholders. I mean, we have management's in there for a good chunk. We have Kinross in there for a good chunk. Anything else you want to add there?
Yeah, I'm actually very proud of the structure. As mentioned, 42 million out would be 55 million fully diluted with some warrants that are as part of the announcement we when we did a small private placement when Kinross came on. Those are striked 25 cents. So market cap wise, we're in and around, call it $10 million Canadian, cash on hand, an inch or so under $2 million. Our CFO does an amazing job of investing part of our treasury. So someone might say, well, it was 2 million last quarter. Well, yeah, that's because we're using interest to pay bills. So I'm very proud of that part of it. The other thing that I want to mention, based to, and I'll finish that in terms of sort of strategic shareholders. You're right, Kinross is in there. Management owns a pretty good chunk, and that's buying. Yeah, I'm blacked out so often that when I have my windows, I go in, and including the last couple of weeks, there's no results out, so I'm able to go in and buy stock. So we have an active participation in the market. We don't assume, hey, shareholders, you should go buy stock, or hey, retail investor, you should go buy stock, if we're not doing the same. So we believe wholeheartedly in that. From other investors, we have a very healthy chunk of shares that are through Haywood. Haywood has supported me in every deal we've ever done. I rarely cheat on Haywood, is kind of our line around the house. So there are some major institutional salespeople, but they hold it in their own account. So we don't have, big funds that hold us, that, have a redemption. Next thing you know, we're in trouble because our stock's getting pounded on a redemption. We don't have that. Paul Stevens out of San Francisco has had a position with us. There's one other that I'm not sure I'm able to share at the moment, but one of the big sort of guys and big voices in our space has a position. But we're pretty well structured. Now it's interesting. I don't know how your listeners would feel or you feel about this, but every once in a while I'll have a random call saying, "Geez, you don't trade enough. You're not liquid enough." And usually that ends with, well, we could be more liquid if you'd like, if you want us to go issue another 100 million shares out and spend a ton of dough on trying to get liquidity. And usually that ends with, no, actually, never mind. We're okay with the way you're structured. On discovery, we should get a really neat, leverage bump, touch wood. What I find unique about our value proposition, which it will probably get to a little further, is, with our cash, 20% of our market cap is cash. And the investment that Kinross is spending, call it 27 million, is 2 to 3 times our market cap. So, going back, I don't want to sound like an old man here, but going back, having that dynamic of Kinross spending $27 million and you've got a market cap of 10, that's kind of upside down. It would never used to be like that. Sorry, I went down a rabbit hole on your question about structure, but so that's sort of what we're lined up for, and then with the Kinross work, we look forward to how things are going to evolve here.
Yeah, Todd, I appreciate you giving information on that and some of the shareholder base. And the equity hasn't traded much lower than 10, 12 cents on some of the lows. And then, of course, with Kinross firing up here, there's been more attention into the stock, where the stock's now trading about 20 cents. Definitely had a long history there of being in those ranges. So we'll see what happens here with this one, and looking at what Kinross is going to be doing out there and potentially some of those results that could come out. So appreciate you sharing some of that. With respect to maybe some of your guys' other ambitions out there for this company, I understand everything is hands on deck for the PwC project and working with Kinross here, but is there any other near-term plans or future plans as to adding exploration projects in Nevada, Todd, or is there another jurisdiction within the United States that you would consider? Just a little bit of thoughts on, overall strategy beyond just PwC.
Right. Well, we've had 2 projects up until recently, and we made a decision to move on from the one. Drill results were good, but we just didn't see the reason to continue. And I think one of the problems our sector has, and I'm not throwing stones at anybody because I could look in the mirror at times and the same thing, is holding on to something for the sake of holding on to something and thinking that it's that important for a shareholder base. We take the view that, we're going after the PwC project. Our efforts are there. But you are 100% on track with, we have irons in the fire on other projects. We do look at other projects. I mean, over the last couple of years, for me to make a decision, or a board to make a decision, probably better said, is going to pick up a project that we don't believe we can take to the promised land. It doesn't make sense. And in fact, there's some really good projects, and I would say, let's just call it Nevada, out there. And I've had lots of calls on saying, hey, gosh, you guys are so structured. You've got money in the bank. You've done deals with, a Cisco for override royalties. You haven't issued a single share from Treasury, except for the day you did the deal with Kinross, in 4 years. Why don't you take your beautifully structured company and go acquire, a 500,000 ounce gold project within a company and buy the company? And the problem with that, Andrew, in my experience in some of the M&A is, you don't know what's in the closet. We originally did a deal many years ago, Terrico, and bought a wonderful project in Idaho. But I ate stock for years on shareholders that had no relationship with us. So I'm not really answering your question, but I'll get more to it. Is from an M&A standpoint, it better be darn good, not only asset wise, but in a company that we're not going to eat stock, which hurts our own shareholders. From a project specific standpoint, I'm open to games. I get calls all the time. We do homework, we do review on projects, but they've got to be pretty darn good for us to go, okay, hang on a minute, we're going to add this to the PwC profile and do another project. So in general, open to opportunities. We're looking at some now, but no guarantees that in 3 months you're going to see another one in our lap unless it's perfect.
Yeah, that's a good way to come at it, Todd. And I appreciate you answering a good answer as to how we would look at the approach as well, and how you guys are being very selective. And of course, you have a very, very good focus point right now with PwC. So always good to get your thoughts on some of the activity out there. Obviously, sentiment in the market can play into some of that increased activity and reviews because of prices. Always good to get your take on that. Well, Todd, short of any other comments that you wanted to add here about Riley, why don't we wrap it up here for now? And I'll leave you with this and any other things you want to add. But for potential investors who are listening in, Riley Gold has a market capitalization of about 10 million Canadian dollars. Why should the company be considered within the institutional, family office, and retail investors' portfolio at this stage?
As we all know, there's stages of stock appreciation and value creation. We can only control a few things. One is where we're located. We check that box. Who our partner is, we more than check that box. I mean, those guys are producing a couple million ounces a year and are the eighth largest producer in the world. Pretty darn good partner. We've done everything we can to mitigate the risk of for a shareholder and investor. So from our standpoint, if Kinross has success and we're able to bring that to the market, our torque on our structure and what share appreciation, or sorry, price appreciation could be, I think that's a pretty darn good reason for someone to at least pay attention to us, put us on their watch, or be a shareholder today. I think that's probably the biggest thing, Andrew. We're just, I think we're doing it right. And we've got people spending good, hard earned money in terms of Kinross on our projects. So, $27 million to spend, and that's 3 times our market cap. I mean, if it's good enough for Kinross, it should be good enough for others that are paying attention to junior companies, and us being one of them.
Very straightforward. And Todd, for investors seeking further information, how can they reach the company?
Yeah, obviously our website, which is RLYGoldcorp.com. We have an info at RLYGoldcorp.com email that certainly can email in, and they come direct to me. I run the IR side, I run the CEO side, I run the chief cook and bottle washer sometimes program, but that's what we have to do when you're a junior. My direct phone number at the office is 604-443-3831. And, if I'm not there, for some reason, leave a message and I always will circle back. So pretty easy access.
That's great, Todd. Well, I appreciate it. Thank you for the introduction to Riley Gold. Keep up the efforts on potential discovery and advancement of PwC, which is now underway. And we look forward to having you back to update in the future.
I appreciate it and have an amazing day.